Jinesh. Thank you so much for joining in today. And let me start with analyzing the market movements for the month of April specifically. What kind of external events do you think are weighing on the markets, and what's the way ahead, specifically talking about this month?
Yeah, if you see this month have been pretty volatile. If you see, given the global events which are taking shape, first is the banking crisis in US as well as in Europe, which is leading to a lot of volatility around. So, what will happen if, let's say, the interest rates go up further from here on? The second is how the inflation in US will taper down, and with that, whether the interest rates halt will come after 25 basis hike, or there are more hikes which are in. Plus, if you really see how the crude oil prices will behave with latest OPEC cutting the production, so I think again the volatility in the market, global market is around, and I think it has been a feature for some time now that volatility is going to be a friend.
Jinesh, also, what about the equity market valuation? You think are they broadly reasonably low? Talking about for the cyclical low in earnings and potential of the revival also. What's your view there?
See, I think if you are looking at comparison to emerging markets, Indian market valuation is still a bit higher as compared to the other emerging markets. And hence, if you see last 12 months, we would have underperformed as a market as compared to other markets. But as the time correction further gets into play, and hopefully there is a revival in earnings after a quarter or so, then I think at least from our stock portfolio point of view, we see fair valuation coming into play, and as earnings growth bounce back happens, we should see improvement in terms of valuation.
Also, now since we are talking about all these triggers and cues, now talking about the new financial year, what are the risk factors that an investor should be aware of? A portfolio should obviously be made with the long-term horizon and the goals lined up with that. But then talking about just this year and the kind of triggers we are having right now, currently moving the market, what are the risk factors that an investor should actually count in and maybe have their strategy set accordingly?
Correct. So I think globally, if you really see, you are having three major countries or continents going slow. You have US moving into mild recession, hopefully. You have Europe, which is, let's say, not doing that great. And also, to some extent, what comes out of China is not a full-blown recovery. It is going to be a slow and steady kind of a recovery. So in that backdrop and the interest rates going up by 300 to 400 basis point, I think clearly you are witnessing some kind of a slowness in the economy. Whether that slowness in the global economy impacts India directly or indirectly is to be seen. Whether we grow at 6% or we grow at 5.6%, I think that is the question we are asking ourselves, that how country will emerge when global backdrop is not looking that great. Hopefully the domestic economy is doing well, capex programs are on track, general momentum in the market is good, the business environment confidence is decent, I would say. So I think all in all, I would say the global route or global volatility will decide some bit of, I would say, slackness in growth in terms of the domestic market. And that is where we need to be very, very careful that really how this global event shapes up. I think India on standalone basis looks pretty good. However, oil prices are always a joker in the pack. So if oil remains below $100, then I think India is in a good shape. If oil rises above $100, then clearly we'll have to see how much growth impact it can have.
Jinesh, you think the second half of this year can be interesting looking at the interest rate hikes now, but then the second half of this particular calendar year might see a pause or maybe cutting down of rates. Do you see that on the cards?
I think so, and we think so as a house also, that you are nearing the peak of interest rates, maybe one more hike, and then hopefully pause. And again, that would depend on the inflation data. It looks like the inflation is cooling off slowly, steadily, and maybe 3 to 4 quarters down the line, there might be talk of cutting off interest rates in US. So clearly, yes, Second half is going to be interesting. Which way the tide turns, hopefully it should be for good.
All right, that will be all. Thank you so much, Jinesh, for being on the show and helping our viewers with all your important inputs today.